Today we are going to talk about a crucial skill for being a successful business owner, record keeping, specifically using records to track income and expenditure. Hi, my name is Mary and I am a new business entrepreneur and I started selling sugarcane in my local markets. I want to track the money that comes into and goes out of my business on a given day. So, at the end of my work day, I take my journal and keep a record of all my daily transactions. This is called an income and expenditure record. First, I want to know how much money came into my business today. This is my income or cash in. It comes from the sale of my products or from any other payments that I receive on a given day. For example, today I sold 20 sugar canes. Each sugar cane is worth 3,100 Ugandan shillings. I take note of this in my income expenditure record. I write today's date, 11th of January 2022. I describe the income that I just received. Sale of 20 sugar canes. Under cash in, I write the total amount of money I got for that transaction. That is 3,100 Ugandan shillings times 20, which is 62,000 Ugandan shillings. Under cash out, I write 0 because I did not spend any money in this transaction. I also write 0 in debt because I did not incur any debts in this transaction. In cash balance, I write the sum of the money I accumulated. So far, 62,000 Ugandan shillings. Today, I also received a cash grant from the IRC of 9,300 Ugandan shillings. So I also record that as income or cash that came in. I write in the date 11th January. The description, IRC payments, 9,300 Ugandan shillings under cash in, 0 under cash out and debt. So, now my cash balance is the income that I had before plus what I have now. 62,000 plus 9,300 Ugandan shillings is equal to 71,300 Ugandan shillings. It's also important that I record expenditure or cash out. This is all the money that leaves my business on a certain day. For example, if I have to buy supplies, or if I want to compensate my friend who came to help me sell my products for a day. Now, suppose that I buy a new knife to cut sugar canes with, which costs 6,200 Ugandan shillings. The recording process is the same as before, but now I write 6,200 Ugandan shillings under cash out because buying supplies means that is money leaving my business. Under cash in and debts, I write 0. And under cash balance this time, I subtract the 6,200 Ugandan shillings from my previous balance. 71,300 minus 6,200 is equal to 65,100 Ugandan shillings. Paying my friend to help me out in the market for a day is also an expenditure. I pay him 3,100 Ugandan shillings. I also record that as expenditure or cash out. Now, my cash balance is 65,100 minus 3,100 is equal to 62,000 Ugandan shillings. Then, at the end of the day, I can calculate my gross profit. This is the difference between the money I had at the end of the day and the money I had at the start of the day. If the number is positive, I am making a profit. If the number is negative, I am incurring a loss. It's okay if I incur losses on some days or some weeks. But for my business to be healthy in the long run, I want to be making a profit. So today, I started with 0 and I ended the day with 62,000 Ugandan shillings. So, my gross profit for today is 62,000 Ugandan shillings. The next day, I come to the market and sell 15 sugar canes. I always start a new day with a cash balance from the previous day. So, 62,000 Ugandan shillings. I record everything in my income expenditure record just like I did the day before. 15 sugar canes times 3,100 Ugandan shillings is equal to 46,500 Ugandan shillings as cash in. 0 debts and 0 cash out. So the new cash balance is 108,500 Ugandan shillings. Today, I also borrowed 31,000 Ugandan shillings from a friend to buy some cups for sugarcane juice, which I will repay tomorrow. So I include 31,000 Ugandan shillings in the debt column and also as cash in, as this is extra money I have today. So my cash balance is 108,500 plus 31,000 is equal to 139,500 Ugandan shillings. So debt counts as cash in for now, but when I repay it, it will count as cash out. Then I add 31,000 Ugandan shillings as cash out for the glasses I buy with the extra money. So my cash balance for today is 139,500 minus 31,000, equaling to 108,500 Ugandan shillings. So my gross profit is the difference between my ending cash balance, 108,500 Ugandan shillings, and my starting cash balance, 62,000 Uganda shillings. So it is 46,500 Ugandan shillings. I do this every day that I work to compare the profitability of my business on different days. When I repay my debts, I record it under the cash out column, and at the end of the week, I can see my weekly gross profit, 31,000 Ugandan shillings. This helps me understand how my business is doing and decide whether I need to change anything. Maybe too much money is leaving my business and I need to limit my expenses, or perhaps my sales are going well and I realize I have money to spare to buy a juicer. Keeping an income and expenditure record is important to understand if I am making a loss or a profit over time, where to cut costs, and can inform my overall business strategy going forward. But this is just how I do it. It has been helpful to me to keep track of my transactions on a regular basis. However, you can organize income and expenditure sheets in the way that works best for you. How will you keep track of your business's income and expenditure?